Well, we have been talking about agriculture commodities for some time about now, whether it has been about monsoon, the sowing, the government procurement, or the farm bills that came in as well. But what this sector really needs is liquidity, and we have reports on how securitization of agri commodities and the capital markets into this really would do wonders, and that's exactly what I'm going to have a conversation on with Sunir Kaul of Origo. Sunir, hi, thank you so much for joining us, and do tell us on how this instrument or the product really works. When we do talk about agri trade and trade finance for that matter, this is an area that seems to be picking up right now, but you do have some numbers on hand.
Right, Manisha. Thank you for having me on the call today. In terms of capital markets, how they link up with commodities, Manisha, I think whenever you talk to any capital market investor, whether it's institutional funds, I think the only thing that comes to their minds is bullion. They look at gold, they look at any other metal as well. I think rarely we have seen in our past and experiences that they have thought about soft commodities or agri commodities as being linked to capital markets. As soon as you mention soft commodities or agri commodities to any institutional investors, I think the first few things that come to their mind is essentially the moment that they read about in the papers that soybean prices are high, they're going to crash in the future, or the maize prices crashed from 1700 in March to 1300 that we have today. So they start to question the stability of the commodity, and then they read about the rainfall and the soybean crop damage in Madhya Pradesh. They get even more concerned. Parallelly, all these institutional funds, if you talk to them, they say that we see that farm or agri commodities is essentially the sector is underfunded, and they would want to participate in that. But then the question starts to arise that...
Well, yes. Sunir, to begin with, I do want to understand, when you talk about the agri market itself, how much of it has an access to institutional capital as of now?
So if you look at the total market, Manisha, it's about a $250 billion production that's out there. If you subtract what the government buys, which is about 100 billion for food security and food stocking, 50 billion that the farmers consume for themselves, you roughly have about 100 billion, which is available for private financing, which could be available for institutional bank funding, etc. As of today, out of that 100 billion, you're looking at only about 5 billion, which is funded by banks through a very traditional instrument, which has been warehouse receipt financing. There is a lack of any other instrument that essentially plays to it. And there is about 90% market that is still available for take, whether to capital markets or any other instrument that's available. So that leaves you about 90 billion market that's available to be tapped in through financial instruments.
Oh, that's huge, isn't it? And as you're saying, it's less than 5% of the agri market, which actually is looking at finances there. So tell us, when you talk about introducing the agro commodities to the capital markets, how are the transactions listed? How are they? Is it dematerialized to begin with? And how are they supported?
So actually, this is one transaction, Manisha, which checks off everything that you can think of. This one is so the way the transaction works is essentially looks at taking this unit of commodity and of course dematerializing to a unit and essentially an ID, and it goes by all the regulators. So the BTC transaction is right now regulated both by Warehouse Development Regulatory Authority, so WDRA, and it's also listed with the SEBI. So essentially, it's a SEBI listed instrument where investors can invest in. To begin with, it looks at securitizing this pool of receivables that we have from any off-taker who wants the financing, and then attaches the security of the inventory that makes the transaction highly secure. Now, this pool of receivables essentially gets assigned to a trust, and then the commodity, the security is maintained by a third party, which is nowhere related to any of the other parties in the transaction, either Origo or our off-taker who is the eventual borrower, or even the investors as well. So given all the security features and a regulated entity which is monitoring it, and an independent trust and a trustee which is monitoring, this transaction got rated A1 by ICRA and becomes a highly secured. So in the end, whatever you can think of, this is highly comparable to any loan against securities that you can think of. In our conversation that we have had with institutional funds and the rating agencies, this scores much, much higher as compared to any other traditional loan against securities that you can think of.
Okay.
So there is no need to essentially not look at commodities as an instrument.
Sure.
Or go ahead. Yeah.
Yeah. So, Neer, no, I just wanted to bring about one more point, and the last one, really, that's all the time that we have. But tell me, so investors can purchase pass-through certificates, which are backed by receivables, as we understand, is what you're trying to tell us. So how much of this does Origo do? And would you say that there is, interest here? Are people receiving it well?
So, Manisha, Origo is the first one to do it. So, in fact, we did the first ever pass-through certificate or a first ever capital market transaction. We executed it a couple of weeks back with an external investor. So, as of today, Origo has 100% market share in PTC transactions. So, we did a small one. It's about $1 million or so.
Okay.
But we are looking at it in terms of growing to close to about 400 crores next year. In the coming Kharif season itself, for the commodities that we have, maize, soybean, and paddy, close to about 100 to 200 crores. We started to market it to banks and BFCs and institutional funds as well, including some mutual funds. So in the coming season, right away, in fact, starting today, essentially the instrument is available for an offtake from any of the funds.